So if that doesn't blow you away and make you realize that you're at the beginning of the crypto gold rush, then I don't know what does. All right, guys, we're going to start it off with a meme. Got Mr. Inflation. Bitcoin pulls up. And then the Federal Reserve rolls up, printing like crazy. And the only change I would make in this meme is I would replace Tron with Bitcoin Cash and Tether with like anything else. I don't know why Tether's on here. Tether is just as manipulated and printed as the Federal Reserve is. So the lesson to be learned here is that Bitcoin and cryptocurrency have fixed monetary policies. It's not to say that they're inflation proof or inflation free, but they have fixed monetary policies. And so it is predictable, unlike the Federal Reserve, which prints at a mad freaking rate. And more so recently, we have just seen the likes of trillions upon trillions upon trillions of dollars being printed. And if you had asked me 5 months ago, would that be happening today? I would not have had a clue. It's that unpredictable. And so at least cryptocurrency and Bitcoin has mathematically coded into it the laws which govern each cryptocurrency. And that includes the issuance rate. All right, so next up, we're going to do what I call an economy check and just briefly touch over some main important factors in the economy. This is the US Treasury yield curve. It has hit new lows for the 10-year, the 20-year, and the 30-year. As you can see right here, we have reached new low territories. So despite all that rampant money printing by the Federal Reserve and the US government bailing out everything it can, unlimited purchases, unlimited asset buying, it can still not prop up the 10-year, the 20-year, the 30-year, which are reaching all new lows. Not to mention the rest of the curve, which just looks pitiful. And basically, it's showing that their money printing has not worked. And like I said before, I'm not trying to be a doomsday sayer. I'm not a negative person, but I do call it like I see it. And based on all these indicators, I think that this will be, unfortunately, the greatest depression that we have seen in perhaps 100 years. So moving right along, we got the Dow Jones Industrial Average. And honestly, what's there to say about this? If you follow Gregory Mannarino, you'll know that this is completely bogus, completely fake, dollars printed out of their asses and bailing out large corporations while issuing pittance sums for small and medium businesses for the everyday person. So while the mega corporations get trillions of dollars, they issue like 100 or 200 or 300 billion at a time, which then runs out for the smaller businesses. And many of these smaller businesses are not able to collect on the free money bailouts. So what this is doing is it's siphoning money from the middle class and the lower class, and it's pushing it up to the upper class and the elite and the 1%. Because they're the ones getting the lion's share of the newly issued money. And so this is a theft model that is very effective and it's very secretive. It's very behind the back. It's sticking the dagger in the back of the middle class person and stealing from them and then pushing it, not by actually taking their dollars, because of course, you know, heaven forbid, the middle class would revolt if you actually took money out of their bank account. So they do the exact same thing, but they do it in secret by print, and then just give it to one sector of society, which then siphons the value. That purchasing power gets siphoned out of the lower and middle class and pumped up into the areas that the powers that be deem that to be, which is not the middle and not the lower class everyday person. So I very much am in support and in favor of ending the lockdown as soon as possible, as safely as possible, with prudence and caution, but ending the lockdown, we can do better. We can take precaution while having a running economy. And if that means everyone's wearing masks and gloves, then so be it. I think that's a small price to pay for avoiding a depression number 2, or the greatest depression, as I said earlier. Okay, so moving on to the cryptocurrency side of things. This is part of the market check. So we have the Bitcoin search term. And this is one of several factors which I will increasingly start to show you guys when I'm tracking how close are we to the next bull run high. This is a factor that is a clue. And right now, what this is telling me, so this is a scale of 0 to 100. and just an arbitrary scale showing relative on this time frame, which goes back to 2015. What was the time period in which the term Bitcoin was most searched, and when was it least searched? And so you can see right here, it was most searched in December of 2017. But you can see that it was ramping up to that point, leading up to that all-time high. So what I'm looking for is I'm looking for this point here on the right of the graph to reach the top of the chart and actually to push this peak down, meaning that this is the new all-time high. And when this starts to happen, when it has at least pushed this point right here, this previous all-time high down, that's when I start getting interested. And that's when I start perhaps thinking about incrementally selling portions of my cryptocurrency, tranches of it, bit by bit, 1% or 2 or 3 or 5, increasingly on the way up. And I will keep you guys informed. I'm going to do another cash out video. I'm going to do more bull run videos, and I will keep you guys informed of what I'm doing and what I'm thinking as I see it. I don't think we're quite there yet. Obviously, as you can see right here, the Bitcoin search term is at an 8 out of 100. And so per the searches on Google, we're not there yet. We're not near that. And it's no surprise we're at, 7,500. We did have a nice uptick recently from about 7,200. It was hovering in that 7,200, 6,800 Bitcoin price range for a long time, for several weeks. And it popped out and went up to 7,500. And I'm going to give you my take on what I think is happening. But I also wanted to show you this next search term, the Bitcoin Halving search term, which is actually at the highest it's ever been since 2015. It's actually higher than it was back here in 2016 at the last halving event. So that's good. That's good news. That means that we have more people interested in Bitcoin and the halving event. And, I get some people who ask me, how do you know that there's going to be a greater influx? They say we would need an exponential number of new money and new people coming into the space to push the price to higher and higher levels. And they're absolutely right. I think that a lot of people don't get the exponential nature of growth. And right here, to me, this is a clue that we absolutely are lined up for exponential growth, because how would we have a highest ever of people interested in the halving event if there weren't more people looking at it right now? And so while we're not at the bull run high, we can see that more eyeballs are looking at Bitcoin right now, and more eyeballs are looking at the Bitcoin halving. So I think this bodes very well for the future price of Bitcoin. And whenever we do hit that peak, I think that this is a precursor of proof showing that we do have more eyeballs and more potential money that's waiting to jump into the market. And so these are just some of the tools I use and the clues I use to help me determine where we are in the cycle of things. So where do I see it going right now? Where do I see the price of Bitcoin? Some of you guys want some more of these price prediction videos, and I will give you them in time. But right now, as you know, the market and the economy is very shaky, very volatile, very unpredictable based on the unlimited printing of assets that the Federal Reserve is taking upon itself. And so I think it's best to let it smooth out a bit and just let's see where things go for the next couple of months. But I'll tell you this, I am as confident as ever in the price increases for Bitcoin and cryptocurrencies in the coming year or two. You cannot print unlimited amounts of money and not expect safe haven assets and alternative stores of wealth to not soak up that value, especially when these assets are cryptocurrencies, which are superior fundamentally to every other alternative asset class. And I'm speaking about gold and silver out there. They're 99% superior to those asset classes. And those asset classes historically will skyrocket in the face of rampant inflation and hyperinflation. It's just a matter of timing. The timing isn't always when you would expect. You'd think, well, they just printed a couple $1 trillion. Where's the effects? It's not exactly timed coincidingly. There's a delay. The market can remain irrational longer than you can remain solvent. And it does take a while, not to mention the fact that money velocity right now has taken a nosedive and has been decreasing over the past years. And with the coronavirus fear, the pandemic, and the lockdown, that's only serving to further reduce the money velocity. And the reason that it reduces money velocity is because people are in fear. People are hiding their money, they're saving it, they're preparing for bad days ahead, because we all can see that we're in a recession despite the ridiculous disconnection of the stock market, which is totally fake, right? Any of us who have two brain cells to put together can see that the stock market does not reflect the economic activity. They are disconnected. And that's why right now the stock market is, I would call it an insane stock market. It is not reflecting the reality of the economy. So when you have people in fear and you have people saving money for that future that they worry about, they're not willing to spend. And so even though there's tons of money being pumped into the economy via bailouts and stimulus checks and things of that nature, it's not actively having an effect. It's actually having a deflationary effect. And if you watch Mike Maloney videos, a big shout out to Mike Maloney for educating us all on the hidden secrets of money, you will learn that in times of a recession or depression, actually, there's an artificial restraint on the money supply. Even if more money is being printed, it actually acts as if there's less money in circulation because people aren't circulating it. They aren't spending it. They aren't buying those goods and services that they were before. They aren't going on all those vacations, those cruises, buying all those hotels, those flights that they were before because they don't feel safe or they don't have the money to do it. And so that actually acts as an artificial reduction in money supply. Even though there are more dollars physically present, it acts as an artificial reduction in money supply. And so you get actually a deflationary effect temporarily before, wait for it, the massive hyperinflation, or if not hyperinflation, at least a great degree of inflation. And that is when gold starts to soar, silver starts to soar. Historically, that's what's happened. And that's what this time around, Bitcoin and cryptocurrencies are going to soar. And in my guesstimation, based on my understanding of the superior fundamentals of Bitcoin and cryptocurrency over gold and silver, I think that gold and silver are going to blow things out of the water. And I think that cryptocurrency and Bitcoin could blow gold and silver out of the water, especially considering things like the total market cap for Bitcoin being like 150 billion or something like that versus 7.5 trillion for gold. There's just so much room for growth that Bitcoin and cryptocurrencies have. It's like altogether, all of cryptocurrency right now has less market cap than some of the largest single organizations in America. So if that doesn't blow you away and make you realize that you're at the beginning of the crypto gold rush, then I don't know what does. Because to me, that's the proof. The proof is that the market cap of a revolutionary, disruptive technology is smaller than a single massive corporation in America. So that's my take on it right now. I am extremely bullish about Bitcoin and cryptocurrencies. And I think that we are going to see that bull run begin. It's not going to happen just yet, I don't think. Historically, it's 2 to 6 months. It starts 2 to 6 months after the halving. So patience. We've been patient and we must be patient a little while longer. We've got a halving coming up in like 15 days. And so in 2 to 6 months after the halving, we should begin to see the gradual uptick of the next bull run. And it will begin to be one of those, it goes higher and higher and it stops looking back. It goes higher and higher, steeper and steeper, more and more vertical. And it just requires those strong holding hands. And so I've been holding hard, holding strong. And, you know, I had a scare in March. I'm going to be honest with you guys. I was a little concerned when we saw that massive price drop in March because it didn't look like the regular pattern of things. And now that a little time has gone by, I'm not so worried about it. And actually, I feel more confident than ever because Bitcoin's price has recovered and regained back to its previous pre-March crash levels, just about. And it's only taken about, 4 to 6 weeks to regain its lost ground. And it's right back up where it was. And so I feel that's a very bullish signal. In retrospect, what happened is that it wasn't just cryptocurrency that dropped in mid-March. It wasn't just Bitcoin that took a drop. It was all assets across the markets. It was gold took a drop, just like Bitcoin did, just like cryptocurrency did. Silver took a drop. The stock market took a drop. And some slightly more, some slightly less, but it all tanked. And all those safe haven assets by now have basically recovered or are making new highs. And so I think this bodes extremely strongly for Bitcoin and cryptocurrencies, as well as gold and silver. And I continue to feel these are the strongest places I could have my money right now. And so I'm glad I didn't have weak hands during those times of worry in March because I held on And I am very glad I did. And it's not to say that we can't see rough times ahead, but I do feel we will pull out of it. We are recovering our position on that mean, on that curve that we usually see with an exponential run up. I think that in mid-March, it was an extremely good buy in hindsight. Buy fear, sell greed. And, there's a lot of people out there that probably sold that fear when they should have been buying into that fear. So at least I held, and I'm hoping that you guys did too. And I hope that you guys come out on top and that we all make it out even better than before in the light of all this economic craziness that we're seeing in the world right now. Keep your eye on the big prize. Keep your eye long-term on the mountain. And I'll be with you standing on the peak, looking back down in a year or two from now. And I think I'll leave the video there. Thank you very much, guys, for your continued support, for your subscribing. Hit that bell icon and just being with me on this awesome, awesome journey. It's a lot of fun, and I'm glad you're here with me to share it.